Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So now I'm continuing the problems on computation of tax liability. So far till the last video I have completed 7 problems on how to compute the tax liability, and for different types of SSCs and different rates are there. So all these things we have done in the last 7 problems. Now I'm continuing 8th problem in this video. So watch the video in sequence, don't join in between. If you join in between, you may not be able to understand, because complete calculations are dependent on the provisions which I have explained in the first video. Hope you are regularly watching all the videos in sequence. If you have not watched earlier videos, I suggest you to go to the playlist of my channel. Select the subject Advanced Aspect of Income Tax. Select the video of tax liability. Watch the first video, get acquainted with the provisions, then you can move ahead. So now before starting the next problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. So take a printout, keep it ready and start watching the video on problems on computation of tax liability. So take a screenshot of the solution of problem 8, 9, 10, 11, 12. 5 problems I'm going to explain in this video. Take a screenshot and keep it ready. Come on viewers, now start the 8th problem. See the 8th problem carefully. For the previous year 2021, Srimati Sravya income details are total income 18 lakh and income from long-term capital gain on listed equity shares. Security transaction tax is paid, it is STT. Security transaction tax is paid is 5,10,000. Calculate tax liability. Remember, the total income 18 lakh. This 18 lakh is the normal income. On the normal income, we apply the slab rates of tax. Whereas LTCG on sale of equity shares, listed equity shares, and where STT is already paid, security transaction tax. Whenever shares are listed in a stock exchange, when shares are transferred, STT will be paid. So the provisions under the Income Tax Act is, if an SSC sold equity shares in a listed stock exchange and STT is paid, so long-term capital gain is exempted up to rupees 1 lakh. The excess of rupees 1 lakh is taxable at 10% flat rate. That means separately we have to calculate. Normal income, we apply the slab rates. 18 lakh rupees is the normal income. On that 18 lakh, we apply the different slab rates. For long-term capital gain on sale of equity shares where STT is paid, 1 lakh rupees are exempted. Remaining is taxable at the rate of 10% flat. That's it. Now, computation of tax liability, total income 18 lakh. This is the normal income. And long-term capital gain on listed equity shares where STT is paid, security transaction tax is paid, is 5,10,000. Now first of all we compute what is the tax on normal income, 18 lakh. So slab, first slab up to 2,50,000 for non-senior citizen. If nothing is mentioned, we assume the SSC is a non-senior citizen below the age of 60 years. That is our assumption. So up to 2,50,000 rupees, first slab income 2,50,000 nil, no tax. Second slab 2,50,000 1 to 5 lakh. The income is 2,50,000. Rate of tax is 5%. So 5% of 2,50,000, 12,500. The third slab is 5 lakh 1 rupee to 10 lakh. So 5 lakh 1 to 10 lakh. The income comes to 5 lakh. The rate of tax is 20%. So 5 lakh into 20% is 1 lakh. Now over 10 lakh rupees, that is the last slab. Over 10 lakh rupees, the rate of tax is 30%. How much is the total income? 18 lakh. So 18 lakh minus 10 lakh. First 3 slabs you deduct. 18 lakh minus 10 lakh, balancing figure is 8 lakh. On 8 lakh, 30%, 2,40,000. So total tax is 3,52,500. 352,500 is the tax on normal income. Normal income. Now we compute the tax on LTCG. Just now I told you, if LTCG on shares are there where STT is paid, up to 1 lakh rupees exempted. LTCG on sale of equity shares which are listed and STT is paid is exempted up to 1 lakh rupees. The excess is taxable at 10%. So taxable amount is 4 lakh 10 because 5 lakh 10,000 is the total. Out of 5 lakh 10,000, 1 lakh rupees are exempted. Deduct 1 lakh, you will get 4 lakh 10,000. This is taxable at 10%. Now here you can say tax on normal income. Already you have computed 3,52,500. To this tax on LTCG, 10% of 4 lakh 10,000, 41,000. Add up both 3,93,500. To this you add as usual health and education cess 4%. Tax liability. 4,09,240 is the tax liability. Finished. Next problem, 9th one. Sri Rangaraj, 60 years old. 60 years old means senior citizen. And is having long-term capital gain of 20,50,000. Tax rate 20% flat. And is not having any other income. Compute tax liability. It's very easy. He doesn't have any other income. Only LTCG. So deduction for senior citizen, the deduction is, the basic exemption is 3 lakh. For senior citizen person, 60 and above. 60 and above, basic exemption is 3 lakh. So from the long-term capital gain 20,50,000, age 60 years, senior citizen, LTCG 20,50,000, rate of tax 20%. And basic exemption is 3 lakh because senior citizen. Non-senior 2,50,000 and senior 3 lakh. So LTCG 20,50,000 less basic exemption 3 lakh. So taxable LTCG will be 17,50,000. Now tax on LTCG 20% of 17,50,000, 3,50,000. Add health and education cess 4%. Tax liability is 3,64,000. That's all. 9th problem completed. Now 10th one. Srimati Vanaja is having income from business. That means normal income 18 lakh and long-term capital gain 4,30,000 taxable at a flat rate of 20%. Calculate tax liability on long-term capital gain. It is not asking you total tax liability. It is simply asking you what is the tax liability on LTCG. So don't consider that 18 lakh rupees income from business. Only we are considering LTCG. So age is not given. So we assume non-senior. For non-senior citizen, basic exemption will be given from the normal income. Normal income is 18 lakh. When we calculate tax on 18 lakh, we use the basic exemption. Now basic exemption is not used for LTCG 4,30,000. LTCG 4,30,000, tax on LTCG 20% of 4,30,000, 86,000. Health and education says 3,440, tax on LTCG 89,440. Remember, we are not calculating tax on income from business because it is asking you only LTCG. And basic exemption will be given only when we tax the other incomes, not from LTCG. That's it. 10th over. Now come to the 11th problem. For the assessment year 21-22, Srimati Ruch income details are income from salary 1 lakh and income from long-term capital gain on gold 20% flat rate of tax is 5,40,000. She is having normal income from salary 1 lakh and LTCG on gold ornaments 5,40,000. Calculate tax liability in the following two situations. If she is a resident and senior citizen. Second, if she is a non-resident. So in these two separate situations are there, we have to calculate the tax liability under the two situations. First situation, if she is a resident and senior citizen. Senior citizen means basic exemption is 3 lakhs. See here. Srimati Ruchi, income from salary 1 lakh, LTCG on gold is 5,40,000. Case 1. If she is resident and senior citizen. First of all, we assume she is a resident and senior citizen. The basic exemption limit is 3 lakh rupees for senior citizen. But she is having normal income of only rupees 1 lakh. Income from salary is only rupees 1 lakh. That means there is a deficiency. 3 lakh minus 1 lakh, 2 lakh rupees is the deficiency. Deficiency in basic exemption. Basic exemption available 3 lakh, but income from salary only 1 lakh. So deficiency 2 lakh. This deficiency of 2 lakh rupees can be set off from Ltcg, and the remaining Ltcg will be taxed at a flat rate of 20%. So here this deficiency can be deducted from Ltcg. So taxable Ltcg will be 5,40,000 minus 2 lakh. So 3,40,000 is the taxable Ltcg, on which 20% is the rate of tax. Tax on Ltcg 20% of 3,40,000, 68,000. Health and education says 4% calculate 2720, 70,720 is the tax liability in situation 1. Now situation 2, if she is not resident. If she is not resident means she is a non-resident. For non-resident SSCs, the basic exemption limit is 2,50,000 for any category of SSC. Non-senior, senior, super senior, for anybody, non-resident SSCs, basic exemption 2,50,000. Secondly, the deficiency cannot be set off from Ltcg for non-senior, non-resident SSCs. This set off, benefit is given only for resident SSCs. For non-resident SSCs, the deficiency cannot be set off from Ltcg. So here basic exemption 2,50,000, but deficiency cannot be set off from Ltcg for non-resident SSCs. Tax on Ltcg, how much is the Ltcg? 5,40,000. So 20% of 5,40,000, 1,08,000. Health and education says 4%, tax liability 1,12,320. That's it. So you can see here, deficiency can be adjusted for resident. Deficiency cannot be adjusted for non-resident. That's the limit. Next, 12th problem. Problem number 12. Sri R.R. Reddy, resident and non-senior citizen, is having 90,000 as income from all sources and long-term capital gain 6,10,000. That means her income from other sources is only 90,000. Basic exemption limit is 2,50,000. So a deficiency is arising. She is having deficiency. Basic exemption limit 2,50,000 and income from all heads is only 90,000. So whatever deficiency she get, that can be set off from Ltcg. How much is the Ltcg? 6,10,000. Determine the nature of income and tax liability for the current assessment year. Now see here, resident and non-senior, basic exemption 2,50,000, income from all sources is 90,000. So there is a deficiency of 1,60,000. This deficiency can be deducted from Ltcg. So taxable Ltcg 6,10,000 minus 160 is 4,50,000. So 4,50,000 is the taxable Ltcg, on which the tax rate 20%. So 20% of 4,50,000, 90,000. To this you add 4%, health and education says 3,600. So 93,600 is the tax liability. That's it. So in this video I have completed 8th, 9th, 10th, 11th, 12th. 5 problems. Every problem I have explained in detail. So we'll continue the next problem in the next video, but before that I want to give the information that I have started a new channel by name Khan's Accounting Institute. So visit my second channel also. That second channel I have made only for IGCSE students. I got many requests from international students, those who are pursuing IGCSE courses like Cambridge, edXL, etc. So for those students, I have started a new channel, that is Khan's Accounting Institute. So visit the channel, watch the videos, and do subscribe that second channel also. Okay, inshallah, we'll continue the next problem in the next video.